Hey, Chris Duff over at Serious Land Capital, vacant land funding partner. Today, I'm going to tell you a bit about how we made $200,000 on a recent flip in just under 60 days. So this is definitely one of the best deals we've ever participated in. Uh, some of the characteristics were just screaming towards us, hey, we think this one's going to be very favorable to us. So the actual underlying asset was along the east coast of the U.S. in a bit more of a rural area, but between some population centers, and it was 55 acres. And usually when you see acreage that large, you start to think, okay, based on some of the road frontage, we could consider subdividing, maybe bump up our price per acre a little bit potentially on this one. And when we took a look at that, though, just the way the parcel was oriented, it didn't quite make as much sense to split the parcel because there was a pond um, that was nearly along the road, or about half of the road frontage, and so it would have made it a bit awkward to carve up parcel. I might have made one of the child parcels a bit more valuable than the other. So that was something that deterred us a little bit there, and I know I've remarked on that, and I remark on it all the time, is that if you're thinking about doing possible subdivide, you really have to assess the underlying characteristics of each part of the parent parcel, because your risk of adverse selection can be extremely large if you don't take into account some parts of the parent parcel being much more positive or negative than other carve-outs. And so that any perceived appreciation that you're building in just by reducing your acreage, because again, usually the rule is smaller the acreage, the higher the price per acre, but you take the risk of longer days on market or reducing your perceived price per acre for child parcel acreage if you have adverse selection that comes into play. So we thought there was a chance of that. And even though the underlying parent parcel had significant road frontage, that could have justified some carve-outs there. And then when we were diligencing the comps in the area, it was quite unusual that you were getting significant number of sold comps, like very recent, within the past three, max of 6 months approximately, that were of similar sized acreage. So we're talking 20, 30, 40 acre plus, that were actually more routinely selling on the market compared to smaller acreage. So that's not that common in many markets to see, larger acreage trading much more routinely versus, carved up child parcels, and for, significant dollar values. Again, usually if you get north of $150,000, $200,000 in price for individual land parcels, your buyer pool tends to start drying up a bit more. But in this particular area, there seemed to be a very strong buyer pool, even recently, that were buying properties north of, a few $100,000. So that made us feel more favorable about us picking up the underlying asset and not doing additional work to it, or we got a survey on it, but not carving it up into other child parcels, because it didn't look like the price per acre was really going to accelerate much beyond what we could get conservatively with the parent parcel, and our price for the parent parcel was still going to be roughly half of what we thought we could conservatively exit the asset for. And it had a lot going for it too in relation to some of those other comps. It's 50 acres just outside of city limits of, not a major city or anything, but a township that wasn't completely rink-a-dink. Had probably I'm just estimating maybe 5,000 plus some people within the population there. Like that, not crazy small. Sometimes you pass towns and you see the signs and they're like, yeah, population 20, 30 people. Yeah, not quite like that. But yeah, really nice acreage just outside of city limits, plus having readily available electricity, water, public water access, no sewer, but that's not unusual, especially for such a large asset like that. And the terrain was very favorable for building as well. Very slightly rolling, but mostly flat for the most part. And yeah, like a very nice pond and a creek that was more along the edge of the property, so it wouldn't prevent much building. And it was also a good setup for potential hunters, which was an attractive point for various end buyers and a more routine feature for properties that we pumped on the market prior. Plus, there was underlying timber value, not a ton, but it does serve as an asset to properties that you look at. If that there is mature timber, even if it's $10,000-$20,000 worth, still something that could be of interest to end buyers here, and just opening up possible buyer pools, beyond a residential, recreational, possible commercial usage for timbering the property. So all of those avenues really made us feel more comfortable with the asset, and having such a significant volume of more recent sold comps, and being able to undercut the active comps in terms of price per acre with the price that we were purchasing the property for. So this was a really, sizable purchase, 160 grand out. And that was just for the underlying asset. There was eventually baked in an extra 5,500 in survey cost. But outside of that, we didn't spend anything else for the property. We had a really good realtor who was extremely active in the area. Her father also ran a local timber company, so he was able to help assess more from marketable timber as well. And this area, interestingly, like the week before we bought it, even I think the day before we were anticipated to close, that's when that really unfortunate Hurricane Helene was flying through much of the East Coast, and it actually delayed closing a bit because the local tile company got hit so hard. Their electricity all was out, and there was a lot of damage within the county that we purchased this property. But very, very fortunately, the street that we bought this property on, it somehow didn't get touched, and the trees weren't all ripped out, and electricity was fine and everything. So we got extremely fortunate from force majeure, act of God type event. Literally the day before we were anticipated to close. If we already had money out and the hurricane kind of wrecked things up, it could have been much different story here, but the timing fortunately worked in our favor. And then once we listed the property, it very quickly started attracting interest. Site visits routinely were occurring, and we were actually a little bit more aggressive on pricing, in terms of pricing a bit less conservatively, just because we thought, and consulting with the broker, we thought, okay, we can leave some room for negotiation. This is probably going to be a pretty attractive asset. We have, maybe 50K plus to work with that, based on our list price, which we started out at 400,000, that we'd be happy, almost $100,000 spread from there if we could move it relatively quickly. And within the month, multiple different visits, and I forget how many offers might have come in, but it was getting so much activity that it's just one of those like, okay, yeah, we definitely have an attractive asset here. As long as I'm getting site visits and calls, I'm usually feeling pretty good about where things are going for a dispo perspective. And we had also listed this, I think just prior to the election, the general election as well. And I know there was like maybe a 2-week bump within the economy after, and it's so hard to say how long-term things can happen, but sometimes those macro factors can play a role within the underlying microeconomies that we operate in as land investors. So it probably helped us, and we probably still would have been fine regardless of the outcome there. But all these confluence of factors probably led to a more favorable result for us. And ultimately, we got a $360,000 cash offer. And I mean cash in terms of there was a third-party lender involved, but we consider those cash offers just because us as the asset holder still get paid out cash at the time of closing, assuming the buyer has their proof of funds and all that. So I'm very happy to take a third-party lender associated deals, and you're rarely going to have folks who are just paying out straight cash, especially above $200,000 value. So we got it under contract very quickly in about a month and exited very shortly thereafter, before the end of last year, right before Christmas. So it was a really nice way to end the year for us. And ultimately, after taking into account commissions and some closing expenses, and then splitting profits with the investor who brought us the deal, we ended up with a 1.52 gross multiple on our invested capital. So basically that equated to us truly taking home $85,000 net of expenses and profit sharing here. Absolutely outstanding outcome. Those deals are few and far between to find. It was just one of those when every time we were checking the various comps and underlying characters, like, this one is looking very favorable. But at the end of the day, land can be tough, especially those higher valuations. We haven't had the best luck in the past of buying above 150,000 before, and usually reducing your buyer pool, have to be more conservative. And if things can go wrong at that amount of capital outlay, they can go wrong very, very quickly. But in this case, it was extremely favorable. Hard to imagine it going any better than, and gave us a lot more firepower and dry powder to work with heading into this year. So hopefully that gives you an idea on what we look for in regard to the land assets, and what's going to be most favorable for us. I'll share more. We have hundreds and hundreds and hundreds of deals that we've looked at, infinite lessons that we've learned, but I wanted to share this one in your own land investing journey, and looking forward to coming back again here tomorrow. Again, if you're looking for funding, seriousland.capital, a zero-cost review of your land deals, land daily diligence, Facebook group on Mondays and Thursdays, and the landpricer.ai for the most accurate and simple way to value land in the U.S. Finally, Unconference in August with Dave Denniston. You can use my last name, DUFF, for $200 off your ticket. You just have to apply on the Unconference website. So long as you're making at least 6 figures in annual revenue, you'll make it in. I will hope to see you there, and feel free to use that discount upon hearing this, and looking forward to next time. Bye.